Welcome to International Business News. A measure of Hong Kong's interbank liquidity halved in the past 2 months, with analysts forecasting more cash drainage as the city's de facto central bank defends its currency. The Hong Kong Monetary Authority has bought a total of 172 billion Hong Kong dollars, that's $22 billion of local currency since May 11, shrinking the aggregate balance to about 165 billion Hong Kong shillings. There has been a push of local interest rates helping narrow the gap with the U.S. to help the Hong Kong Monetary Authority maintain its dollar peg. And still in Asia, the crisis engulfing China's property sector will help swing the iron ore market to a significant surplus over the second half of the year and push prices sharply lower, according to Goldman Sachs Group. The bank now projects an excess of 67 million tons of the steel-making mineral for the rest of 2022 after a deficit of 56 million tons in the first half, reflecting both weakness in the onshore real estate and a sharp deceleration in steel demand outside China, according to a note on Tuesday. Now, the bank said it expects the iron ore market's current predicament to outlast the sell-off seen in 2021, although conditions are unlikely to get as bad as the 2014-2015 bear market, which saw prices hit a low of $38 a ton. The dollar wobbled around just below multi-decade peaks on Tuesday as traders waited on a rate hike from the U.S. Federal Reserve and for any clue about whether markers of a slowing economy will prompt a shift away from its focus on inflation. The euro inched up to $1.0235 but was hemmed in by uncertainty over Europe's energy security, which is not helped by a looming cut in the westbound flow of Russian gas. The yen steadied at 136.33 per dollar. Now, the Fed concludes a two-day meeting on Wednesday, while traders have been dialing back expectations as markets try and figure out if or when policymakers might pause their inflation-fighting efforts because there are signs the economy is starting to slow. Oil rose on Tuesday on expectations Russia's reduction in natural gas supply to Europe could encourage a switch to crude, though concerns over weakening fuel demand because of an expected increase in U.S. interest rates limited gains. Brent crude futures for September settlement climbed 45 cents or 0.4% to $105.60 a barrel by 0112 GMT, following a 1.9% gain in the previous day. U.S. West Texas Intermediate crude futures for September delivery increased 34 cents or 0.4% to $97.04 a barrel, having gained 2.1% on Monday. Russia tightened its gas squeeze on Europe on Monday as Gazprom said supplies through the Nord Stream 1 pipeline to Germany will drop to just 20% of capacity. In response to Russia's gas supply tightening, Austria is on track to reach its target of topping up its natural gas storage to 80% of capacity by the start of the winter heating season. Energy Minister Leonor Gewessler said on Monday. She revealed that for Austria, this means the country will re-intensify efforts to achieve storage targets as one storage facility run by OMV had already reached the 80% target. And that's all on international business news. Now we will move to our other conversation. Now Nigeria is, well, that's not where we're going. We're looking at Bitcoin actually, but then we'll look at how it affects Nigeria and every other country. Now Bitcoin fell by as much as 4.3% on Monday, dipping back to lows not seen as a month ago. And it wasn't alone. Other cryptos like Ether, Avalanche, and Solana started the week in the red too. So we get to look at how this crypto plunge or this furthering of the crypto crunch is affecting China, Nigeria, and every other country that deals with crypto. We'll go on this break. We'll be right back. You're welcome to the second conversation on Business Edge. Of course, like we told you, Bitcoin is falling, and as of now, it is said to have fallen by about 4.3%. And so joining us on the conversation from Port Harcourt, Nigeria, is Obinna Iwuno, Executive Secretary, SiBAN, Cryptocurrency Compliance Specialist and Investigator. And we will be discussing the issue this morning. You're welcome, Obinna. Thanks for joining us on Business Edge. Hello, Obinna.
Thank you so much for having me.
Okay, beautiful. Thanks for joining us on this particular side of the conversation. On Wednesday, the U.S. Fed is expected to announce a 0.75% point rise in interest rates as it fights to get inflation under control. So tell us, how do you think this move could impact the cryptocurrency markets?
Well, we know that for every time that there has been a hike in the interest rates, of course, it affects the crypto market, not just the crypto market, but the financial market in general. We see stocks fall. It also has an impact in the crypto market. And sometimes it also spirals over into the housing market also, because at this time when the interest rates are on the increase, financial institutions and especially lenders would want to keep more finances, more cash flow in their within their control, of course, because the hike in the interest rate is like a signal for them that, hey, we are about to make more money, and so they try to pull out their finances from other parts of investments that they would seem to be receiving a shock from. All right. And so this kind of has an effect on the crypto market adversely. And of course, another reason is because of the fact that the crypto market is still largely the word I call dollarized, because it still depends largely on the US dollar for it to actually function. All right. So, but if there is a clear disintegration of crypto from dollar, then you would see that these interest hikes or whether interest lows would really have little or no effect on the crypto market, and this is what I think it's going to happen. But another case scenario is the point where the market has also reached a kind of maturity stage where players in the market now trust the instrumentality of the cryptocurrency, that irrespective of what happens in the traditional industry, no matter what the monetary policy is or the financial situation outside of crypto, that crypto on its own exists and operates as a different independent market, irrespective of what the US dollar does. And we would only see that come to happen when we begin to use crypto largely as a currency for transaction, other than an instrumentality of an instrument of speculation, of profit, of trade, and what it is currently. Because right now there are little avenues where we can use crypto for payments globally. All right. There are a lot of places where crypto is being accepted as payment, but you cannot compare it to the general global transaction volume. Let's look at it. How many countries have adopted crypto yet as a legal tender? We talk about El Salvador, and then we talk about Central African Republic, as against the number of countries that are in the world currently. All right. So that is the same thing that is affecting crypto when it comes to transaction. And of course, you know that Bitcoin is king at the moment. Bitcoin still controls over 40% of the crypto market. So if anything happens to Bitcoin, you will see the adverse effect in the rest of the crypto market. All right. So if Bitcoin tends to go down, you will see the shock reflect in altcoins, starting from Ethereum and the rest of them. And if Bitcoin goes up, you also see that reflect in the prices of altcoins from Ethereum and the rest of them. So it's like it's just the same case scenario. Okay. So if there is going to be a hike in the interest rate, of course we would expect some of that to have an effect in the on Bitcoin, and then of course the crypto market in general. But maybe not as much as we are expecting here.
All right, talking about the effect it will have, now, do you think that this move by the U.S. Fed, or the probable move by the U.S. Fed, would send the market capitalization of the cryptocurrencies back below the $1,000 threshold?
When you say $1,000 threshold, what price exactly? Are you talking about the price of a particular coin, or you are talking about the market capitalization? Because the market capitalization, we should be talking about trillions of dollars, the entire market capitalization, except you are referring to the price of a particular coin, and maybe coins that should be in that region, which could go maybe below $1,000, should be like Ethereum. But in my opinion, I don't think it's going to have that much of an effect, because, we have witnessed like 2 hikes within the past couple of months, and we have seen the effect on the market. Yeah, the market really went down, and about $2 trillion left the market. All right. But then the hike also was not the only thing that contributed to the decline in the market capitalization. If you look at scenarios like what happened with Luna, which had a very large effect on the industry, and of course it sends a lot of FOD out there. FOD means fear, uncertainty, and doubt. So there was a lot of fear, and people were panic selling. And don't forget that at the same time that people were panic selling, who were they selling to? Somebody was buying. All right. So there is a group of the industry which is at an accumulation stage, and there is another group of people who are also the ones that are selling off. So for every sell-off, there is a buyer. So even if it gets to below 1,000, there would always be buyers for that. And you know that one thing is, when it is already oversold, you will have to see a reversal in the market. So no matter what the effect is, there is always going to be that meeting point where a balance will have to be created, and you will see a reversal in trend, or a reversal in the situation that has been occurring maybe for the past few days, or the past weeks, or the past months. There would always be a reversal. Well, there was a time the current price of Bitcoin was a dream. People were dreaming that Bitcoin would get to $20,000. And in 2017, we saw that happen, and we called it a bull run, that Bitcoin got to $20,000. Now, today, we are discussing Bitcoin at $20,000 as a decline in the market. All right. So it will not always be the same.
Well, Obinna, you're talking about a balance. You're very optimistic in your postulation, or in your opinion, about a balance in the cryptocurrency moving up. Now, when you look at it, you discover that there's a lot of volatility within the crypto world, and that has been on for months. It's making investors pull out their funds. It's causing a lot of scrutinies and uncertainties if we have to be critical and be truthful to ourselves. But then some people are talking about the need for a regulation. Maybe that can help crypto have a bit of balance, stability. Would you advocate such? And if there would be some sort of regulation for that platform, or for that kind of currency, how do you think it should play out? In what form do you think it should come?
Okay, so I'm going to take you on 2 parts. When we talk about optimism and balance, I'm not being optimism, I'm being factual. All right, I'm being factual because you would look at price history of Bitcoin, and then of the crypto market in general. All right, we have always seen it grow, come back and grow bigger than it was. All right. So this is not going to be the end of it. It's going to continue like that because the historical record of the asset performance is there that proves that this is a pattern.
But should it be regulated? And should it be regulated to give a bit of confidence?
It should be regulated. I'm a certified cryptocurrency compliance specialist.
Okay.
And a certified cryptocurrency investigator.
Okay.
I am an advocate for regulation.
All right.
All right. But mind you, crypto is not the only market that is volatile. The stock market is highly volatile.
Mm-hmm.
Go look at the prices of stocks of Netflix, of Microsoft, of Google, and the rest of them. You know, even count traditional companies like Walmart, like Coca-Cola, like Pepsi. None of them have performed any better. Some of them have lost over 80% of their value. So it is not like tagging cryptocurrency as the volatile market. All financial markets are volatile.
All right, Obinna.
The only thing here is that crypto should be regulated because when crypto is regulated, one, we stand to gain more than we are losing, because with regulation and a clear direction, you will see more innovation, more investment, more growth and development come through crypto market industry.
All right, Obinna, let's peg Obinna. Sorry to cut you. We'll peg the conversation at that point. Definitely, we'll have some other conversation emanating from this discussion that we get to bring you back on board, and we believe that you will oblige our invitation some other time. But thank you so much for coming on the show. All right, thank you so much, Obinna. Now, whatever the case may be, some people are saying that they are optimistic and they believe that the worst of Bitcoin sell-off is over after a 53% plunge this year. But is that really a bankable optimism after months of fall? Definitely, we'll continue to monitor the situation and continue to bring that conversation to keep you updated. We'll quickly go on a break now, and when we return, it's time for NC4 to watch. And before we go on the show, these are the 4 stories that we are tracking on Business Edge. We start by telling you that the Central Bank of Mozambique has extended the suspension of Standard Bank from the country's interbank foreign exchange market for another year. The Bank of Mozambique has revealed the South Africa-based lender was fined $4.6 million in July 2021 by the Mozambique Central Bank for engaging in fraudulent activities. Away from that, Zimbabwe has launched a gold coin this week in an effort to combat rising inflation and quell the public's desire for US dollars. After the nation's internationally renowned Victoria Falls, the 22-carat gold coins were given the name Mosiatunya, which means the smoke that thunders, and were each individually numbered. The government, led by President Nana Akufo-Addo, did not request extra funds with the 2022 media budget. Despite reduced revenues and the public outcry of hard economic hardship in the system, Ken Ofori-Atta, the Minister for Finance, that the government was committed to staying within the appropriation for 2022. And finally, the Monetary Policy Committee of the Central Bank of Kenya is scheduled to convene on Wednesday against the backdrop of 58-month high inflation and the depreciating shilling due to an increase in the cost of necessities like cooking gas, bread, and cooking oil brought on by the conflict in Ukraine. Most Kenyans' household budgets have been strained. And that's it on NC4 to watch, and that brings us to the end of the conversation for today. Tomorrow is another day, but then you can visit our social media handle at New Central TV. You can download our mobile app on App Store and Play Store, and of course head to our website www.newcentral.africa for so many engagements that we have for you there. My name is Likon Obanjo. Until next time, do have a beautiful day.